All right, we've been waiting. The time has finally come. We are here with Dr. Brett Steenbarger. Dr. Steenbarger is a professor of psychiatry at behavioral sciences at Syracuse University, New York, in upstate New York. Specializes in short-time research-based approaches to making life changes. So many of us are here trying to make those life changes. It's wonderful to have him here. He has been a stock trader since the 70s, uh, began applying these kind of brief therapy methods to market makers and prop traders in Chicago in 2003. Dr. Steenberg has worked with the best and the brightest as far as traders, institutional traders, prop traders, all over the world. He has written several books, including The Daily Trading Coach and one of my favorites, Enhancing Trader Performance. He recently wrote an online blog book called Radical Renewal on the topic of spirituality of trading and is currently writing his next book. You are a very proficient author, Brett. And they're all just all the top of everybody's favorite trading books. Doctor, it's great to have you with us. How you feeling today? I know we're all really excited to get into the questions, but how are things? You said you've been trading well.
It's all good, Hogue. Thanks for the introduction, and it's great to be here. Yes, I work with several different large hedge funds, and right now a lot has been going on in macro markets. We have a lot going on in rates. We have a lot going on in the stock market, and it's all interconnected. And when there are those interconnections, people make money. So I'll be happy to share some of those perspectives for those of you wanting a big picture.
Wonderful. All right. Without further ado, we have a lot of good questions here. I've kind of organized them into kind of categories. And if it's all right with you, Doctor, why don't we start with emotions, because emotions are such a big part of trading. A rather broad question is this is from Marco. What can you do to control emotions while trading? Or what is your strategy to control your emotions? Or to add to that, do you try and control emotions?
Okay, good question, and a common question. So let me reflect. Yeah, I work with people at hedge funds. They've been trading for quite a while. They're managing large amounts of money. One fund where I work, the smallest portfolio, the smallest account is 200 million. So they're managing a good amount of money. So there's lots of room to lose lots of money. Of my meetings with the portfolio managers and the team members, emotional trading and controlling emotions almost never comes up. This is a very important perspective. The issue of controlling emotions is common for those just beginning in the trading enterprise. Once we have reached a certain level of mastery, then we feel confidence, we feel control, and so we don't become overly emotional. What happens typically is that traders are eager to trade, they're excited about markets, they're excited about trading, and they put risk on before they are really ready to handle the ups and downs of P&L. I was sitting in on a meeting of developing traders just the other week, and the mentor with these developing traders had a rule around a setup, some opportunity in the market. They had to trade it 20 times with minimal risk and write up each of those 20 trades to see how they worked, what didn't work, what they could do differently. They had to do it at least 20 times with minimal risk to make it very familiar before they put on larger risk. Something that is super familiar to us can't throw us for a loop. And so we want to spend enough time in training, in practice, in becoming familiar with the ups and downs of the opportunities for trading so that we're not thrown for a loop when something goes against us.
Awesome answer. And it kind of goes to one of the strategy questions that somebody was asking. Let me get the name here. Perluigi. And he was asking, how do you scale up when you're finding consistent success? By scaling, I don't mean only the position size, but how do I adapt my process to account for the increased risk? And I think you really just went through that. When you're scaling up, you should be so familiar with that setup. You've done that setup 100 times, and that should help maybe alleviate some of the added emotion or pressure of adding more to your risk. In that case, should be something you're so familiar with. You do it every time, whether it was 1 or 100 contracts.
Yeah, that is true, Hogue. However, if I scale from 1 to 100, and I'm exaggerating here,
Oh yes,
the volatility of my P&L it goes off the chart, and that volatility of P&L translates into emotional volatility. So if I want to scale up the trading that I'm doing, I want to do that gradually so that the P&L changes don't feel qualitatively different. And so I get profitable at a higher level of risk taking, then I take the next jump, I get profitable at that level, take the next jump. So it's a stair-step approach. And that works very well. So the idea is not to get big, the idea is to get bigger, to go in doable increments. That being said, the most successful traders I work with, they scale up by scaling out. In other words, they find new opportunities and ones that are different from, not correlated with the ones they've already been trading. And so they can take on more risk because they're allocating to different types of trades. That diversification reduces the volatility of the P&L and helps them weather the ups and downs.
Fantastic answer to that. And of course, I would never suggest to anyone that they go from trading one contract to 100. Of course, Dr. Brett is absolutely correct. You get bigger in small ways till you get used to the idea of that bigger risk, and then if things are continue to go successfully, then you add to that risk over a period of time. So yes, I would never tell anybody, well, if you're doing well trading one, why don't you trade 100? That's probably not going to be the right idea. So I've got a question here from Amir. He's been trading for 2 years. He has a tested edge that is proven as well as that is proven as well as defined. He's been having it. He's been running into an issue every time he gets to a funded account. He's been funded here over 4 times. But however, when he starts trading the funded account, he always goes into a losing streak that he can only attribute to the greed I develop when thinking of the potential that I can make in the account. I'm sure you know how frustrating this can be. The question is, what actionable practices could I implement to my psychology to avoid falling into this rabbit hole of insanity? He says, rabbit hole of insanity. Well, I think we all experience this at some point and to some degree in our trading careers. Doctor, what would you say to our good friend Amir?
Yeah, so it's a great question, Amir. And when we go live, and obviously we have real capital at risk. In addition, we're going live with our careers. This means a lot to us in the psychological sense, not just in the financial sense. If you were, a Navy SEAL, and you've been practicing a dangerous mission, and then finally it's time to get out on the boats and get onto land and go after the enemy. Now the risk is real. Now you're in true, danger. You've practiced and practiced and practiced, but now you're live. The first thing you don't think about is how many enemy soldiers you're going to kill. That is not what you think about if you're that Navy SEAL. you're going to think about, what have I practiced? What do I need to do? And what dangers do I need to be on the lookout for? In medical school, we say, above all else, do no harm. So when you go live, the first thought is not going to be about how much you can make, but you want to be psychologically prepared for losing. All of us have uh, a limited win percentage in our trading. So you want to be prepared psychologically to lose, and make sure you're prepared to lose the right amount of money so that then you can make the money when opportunities kick in. So you want to make sure that your psychology is not totally different when you go live. And you want to make sure that you're in the mindset of anticipating drawdown and playing out in your head how you're going to deal with that, rather than having the drawdown surprise you, shock you, and put you into an emotional state.
It's almost a dance with the one you brung. You've trained for it. You're ready for it. It's just the fact that it's now, real money that seems to make the difference. And if you're prepared for any outcome, you may find the outcome you're looking for. If you fear the outcome, if you fear the bad outcome, sometimes that has a tendency to, to self-fulfilling prophecy. We create what we fear, and if you fear loss, we tend to create loss, it seems. So speaking of somebody that's getting into a funded account for the first time and having losses, tilt always becomes an issue. And I know we talk about tilt a lot, and I'm just going to add this question from Feng. Feng is asking, how to practically overcome tilt when it happens trading real money. He puts a daily loss limit and sticks to it. Finds himself in a situation that he hits these limits for days in a row because he goes into tilt too quickly, and then it comes the next day and it happens again and again. He goes down that rabbit hole. He feels as though, he has a model. He likes his trading. He likes his strategy. He likes his process, but because of psychology, he can't execute it on it correctly because he gets scared out or tilted or is just pushing too much. Is there any practical action that somebody can kind of put in front of themselves and practice to get past this?
Yes, there is. And I've written about this both on the Trader Feed blog and in my books. Probably the most powerful technique for overcoming tilt in that situation is known as exposure work. Now, in exposure work, the first step is that you train yourself in a relaxation method. So you could train yourself with deep, slow breathing to get yourself into the zone, get yourself very calm, very focused. You could use meditation for that purpose. You could learn to meditate and get yourself into a very calm state, visualizing something soothing, calming, relaxing, while you breathe deeply and slowly, get yourself relaxed. I use biofeedback, brainwave biofeedback. So I'm getting real-time information about whether my brain waves are in an agitated state or in a more relaxed state. And so I can train myself to stay in that calm zone. But the first step is you teach yourself how to be relaxed, just under normal conditions, not with any trades on. Teach yourself, and then do that again, so you can get yourself relaxed and focused pretty much on demand. That's step one. Step two is that you mentally rehearse the loss situation. You're out of the market, you don't have a position on, and you visualize position going against you, and you're watching the P&L, and you're imagining feeling frustration about that. And so you're visualizing the whole scenario while keeping yourself calm and focused. You're doing your deep breathing, you're sitting very still, you're exposing yourself to the stressful situation. And literally, again and again and again, you're training yourself to stay calm and focused. So the key is repetition, practicing that again, so that you learn, your body learns a connection between that calm and the situation of losing. Then in real time, the third step, in real time, when you have a position on and it starts to go against you, you're doing your deep breathing, you're keeping yourself calm, you're doing everything that you practiced. And sure enough, because you've been practicing that and anticipating it, it no longer is a threat and you don't go into tilt. So the whole key is practice, training yourself to stay calm, stay focused, even when things are going against you. Every loss should be a planned loss. In other words, you have a stop.
Right.
You know how much you're willing to lose, how much you can lose, and you're mentally rehearsing it again and again while you're focused and calm so that it's not threatening to you.
Fantastic question.
We can't be calm and focused and on tilt. The two don't go together.
No.
So you're training yourself in the anti-tilt mode. And you're doing that in your practice time, exposing yourself to those scenarios of loss, but in a very controlled way.
Yeah, I like to say, calm and collected and clear-headed as centered. You're centered. You're not on tilt, and you're not over exuberant either. Over exuberance comes with a whole other set of problems. But trying to remain centered is, of course, going to be helpful because, I mean, if you're on tilt, your cognitive abilities are hijacked by your emotions, right? And
Right.
you don't really think right when you're that way. When I ask a couple of physical questions, because you were kind of going into the keeping yourself calm using breathing or other methods to bring yourself back to a calm place or back to being centered. And they're very similar questions. Herbert and Flores. First one is, how do you stay sharp throughout the day? I only trade the first 2 hours and the last 2 hours of the session, but my decision making tends to get worse as the day goes on. And then the other one was cognitive fatigue is a silent killer. It's lurking around every corner every single day. Common knowledge that fatigue makes people take lower quality decisions without really realizing it. What are the most useful practices you've found to either improve or notice this is happening throughout the day? What do you do yourself to combat these or have seen others do in these scenarios? I love this question.
Yeah, it's a great question. So there are two things that I do and people I work with do. The one is taking frequent breaks. Everyone has a limited attention span. And particularly when you're following markets closely, you need to be laser focused. We can't sustain that mode forever. And so to quickly take a break, get away from the screen, refresh, can be very, very helpful. The second thing that I have found helpful is back to that idea of biofeedback. Because using the biofeedback device, I get real-time feedback of when I'm concentrating and when I'm not. I can work with the machine to build how long I sustain concentration. So literally, it's a workout to sustain my concentration muscles. That is doable, takes practice, but we'll become better and better and better at staying locked in. The majority of us, even if we do extend our concentration, we do need to take breaks. And doing that with a trading buddy, doing that away from the screen, knowing what refreshes us can be super, super helpful. Otherwise, without concentration, we become reactive and end up making impulsive decisions.
Thank you, doctor. It's almost like, being an athlete and practicing the fundamentals of what you're doing. Or if you're a Navy SEAL, you're practicing the fundamentals of going into battle. You're getting ready, preparing for the game, so that when you're in the game, you're much more likely to be able to perform at your best. And that fatigue, of course, is something that everybody deals with. And fantastic answer. And I'd like to go into a little question about discipline right now. At least RC says this question is about discipline, but I think there's a lot more to it. RC says, I know exactly what's stopping me from being a successful trader. That's important. Know what the problem is, and then you can start to tackle it. He has a lack of discipline. I want to be successful fast. I have a lot of trading success in the past, so I know what I'm capable of, but I've been very undisciplined, and I'm rushing to get where I want to be. I know if I slow down, I'll accomplish my goals, but yet I continue to make the same mistakes. Why is that?
Okay, the obvious reason why that occurs is because markets keep changing, and they change in their direction, they change in their volatility, and what was working yesterday doesn't work today. And so if we don't adapt, then we go through the periods of making money, then the periods of losing money, and so forth. The discipline part is in the preparation for the trading. In other words, we are never going to be more disciplined in our trading than we are in how we run our lives. So right away, you want to look at the discipline of how you lead your life, how you use your time. What do you do when you first get up in the morning? How productive are you? What do you try to accomplish each day? Many, many times people are relatively undisciplined with how they use their time outside of trading, and then they expect themselves to be super disciplined in markets. It doesn't work that way. So we actually look to our day-to-day lives as opportunities to practice being disciplined. We do this in trading by creating processes. We have processes for preparing for the day's trade, generating ideas. We have processes for how we want to express our ideas. Am I going to express it with an ETF? Let's say I'm trading stocks. Am I going to express it with an ETF? Am I going to express it in the futures? Am I going to express it with some long-short combination or with options? So there's a whole separate process of how we express trades, and there's a separate process for how we manage positions once they're on. And so what we're doing in our preparation for trading, and then at the end, our review of the trading we have done, is we are creating. We're always viewing markets, trading, reviewing markets and trading. And by creating a disciplined process, we're much more likely to make disciplined decisions during the trading day.
Awesome. Thank you. I had a question here and I lost it, which kind of goes with this. Where was it? Okay, here it is. The question I lost it here somewhere, but I think it goes right along kind of with what you were talking about. And the question I'll find it as you get into the answer. But what kind of preparation? And as a trading coach, I know that you're always talking about preparation, performance, and review. Preparation, performance, and review. How much time or how detailed should a day's daily preparation be to be a day trader?
Yeah, good question. I've mentioned before that in every performance field that we can think of professional sports, think of professional acting. In any performance field, top elite performers spend much more time in practice than they do in actual performance. And it's the time spent in practice that prepares them and gives them the right mindset during the performance. So, right away, if I'm starting my trading day, I'm up early in the morning and I get my exercise in and my time with family, but I'm watching markets and I'm looking at what's moving and particularly what's moving relative to everything else. I'm reading research reports, I'm reading news, I'm tracking data as they come in, if there are economic releases, that type of thing. I'm looking at how the market responds, pre-market, if there are earnings announcements, et cetera, et cetera, et cetera. So I'm using that observation time as preparation because I want to pick up on themes. Had an interesting situation come up a little while ago where the stock market was trading pre New York Open, and at 8:30 in the morning there was a big spike higher, and the traders were debating what to do following that spike. It spiked higher and then kept going up. And some were wanting to fade that because they were bearish. Some were wanting to go with it, but they didn't know how to go with it because they didn't want to chase, et cetera, et cetera. And it occurred to me that the people talking had no effing clue why the market jumped at 8:30 in the morning. They hadn't prepared. Well, they didn't even know to prepare. At 8:30, we had some growth numbers come out in the economy, the GDP numbers, and growth was solid. And if you looked at what happened in stocks, we shot up. If you looked at what happened in bonds, not much happened. So what the combination of the markets was telling us is that we have non-inflationary growth. That is as good a combination as you are going to get in the macroeconomic. And sure enough, you've seen since then, in the last few days, the stock market's gone up, 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 up.
Yes.
Because
right.
institutions are putting money to work because now the narrative is about sustainable growth. It's not about recession and it's not about inflation. The traders had not been looking at these other markets. They weren't prepared. And so all they could do is react to this market that had jumped up. If they had the understanding that came from the preparation, they would have used every downtick as an opportunity to potentially to buy. In fact, what we discussed in that session, I said, we want to consider the possibility that this is a trend day to the upside. Trend day to the upside means you start near the low of the day and you finish near the high of the day. And if that's true, that dictates how you trade on that day. But you can't know that if you're not even asking that question. And you can't ask the question unless you look at the right information. So the whole idea here is that preparation allows us to be focused and do the right things. And often preparation means we look outside of our market and get a big picture, because many times we're taking advantage of the movement created by the institutional traders.
Great answer. And that goes right along with our tip of the week here on Top Step TV, which is stay informed. Stay updated on market news and developments. Be aware of economic indicators and earnings reports and monitor changes in market sentiment. Fantastic answer. Right along with that tip of the week from Topstep TV. All right.
Hey, can
McCall
I jump
has
in? Can I just jump
yeah,
in?
please.
In terms of being informed, um, because right now in the macro markets, the main thing people are looking at is interest rates. And because interest rates will signal, are we in a growth environment, inflation environment? Are we in a
Mhm.
recessionary environment? So you look at short-term rates, everything from 3 months to 2 years. You look at longer-term rates and how those are moving relative to one another. Those tell a real story. And when there's a meaningful movement in rates, it means that people are putting on big bets in the economy, and that should show through, carry over to other things that we trade.
Fantastic. Folks, you can just tell that the good doctor here makes very good use of his time. He not only is he a doctor and a psychiatrist or psychologist, he's an economist as well. But I guess you have to be a bit of an economist if you're going to be a trader, don't you?
Well, you have to be a good observer of what successful people do. And the successful people I work with, they're looking at these kind of things. So I've learned that by being around them. I don't have that particular expertise myself, but I know what they're thinking. I know what they're looking for. It's important to know who we're making money from. And many times it's the big institutions, because when they see a theme emerge, they have to get into it in big size. They can't do it all at once. And so they start the ball rolling. We can catch that early. We can be quick and ride that,
Get on it.
um, get on it, and be very successful with it.
Right. Next question is in the mindset category. McCall is commenting. He just finished your radical renewal. He found it deeply resonated with him on many levels. He's also into spirituality and psychology, and he says, "Thank you for writing this masterpiece." Um, he's high in openness and creativity, and struggling massively with consistency, organization, and completing routines, mainly preparation before trading. With his style of trading relying on accurate technical analysis, 90% of the success lies in his prep, having a solid plan, being aware of all scenarios, and preparing trade entries. A lot of what you were just talking about is he's got looks like a big, good overview of the current situation. He's optimized his workflow to force consistency with specific checklists, reminders on his phone. Very often, he finds he still misses some steps, making mistakes from oversight or not slowing down to be deliberate enough, or failing to consider obvious potential setups and so on. Then only to realize in hindsight, and then he gets very frustrated and angry with himself. Like you wrote, the exercise of our strength is intrinsically rewarding, just as encounters with our weakness are frustrating. He's asking, do you have any suggestions on how to manage this? And he says, that's really exactly what it feels like. Exercising strength always feels rewarding and good. Encountering weaknesses is always frustrating, and it always feels like that. And I think for everybody, McCall, do you have any suggestions on how to manage this? And he, of course, appreciates your advice.
Great, yeah, and I appreciate his interest in the radical renewal. So that's a book written in blog form, and that's free on my blog site, traderfeed.blogspot.com. Um, okay, so there's a perspective in psychology called the solution focused perspective. And in solution focused work, we don't start by working on problems. We start by looking at situations when those problems are not occurring. So when he is trading successfully, when he's prepared, and when he has implemented his ideas, what has he been doing that allows him to be consistent? what is unique about his preparation, what's unique about how he approaches the trading, what's been unique about his mindset. In other words, reverse engineer your successes, the situations when the problems are not occurring, and very often you'll figure out what to do with consistency. Many times, people who are very good at open-mindedness and creativity, they love the big picture, they love abstract thinking, and so the detail work of trading doesn't come naturally to them. And indeed, they may not be best suited for very short-term trading. They may be better suited to bigger pictures and ideas and so forth. Some of the investors I work with, so they're really longer term, are very creative, very open-minded people. You want to consult your winning trades, your best trades, to figure out what you're good at, how you do it well, and then you build that into a process.
Thank you for that answer. I have a very brief question for Maria, and there's so many frustrated traders out there, and trading is very difficult. But I believe that most everybody can find a way to succeed with it to some degree or another. But Maria is asking how to work on her mindset after 5 years of trying to trade with no positive results. I feel for you, Maria. I want to help.
What should I do, Hogue, if I've been dating someone for 5 years and I just don't feel close to the person, they don't feel close to me? What should I do?
Well, back in the day, it was you either broke up or married her. It was one or the other. But you have to find somebody that you align with and that you can relate with and that you can love. Maybe the whatever she's trading or the product she's trying to trade aren't lining up with her personality.
Yeah. In other words, if you're spending years and something's not working out, then you have real information that a change is necessary. And it's not easy to leave a long-term relationship, but it can be the best thing for us. In a recent blog post on the Trader Feed site, I proposed that every one of us is Superman. We have an average look. We look pretty average. We look like Clark Kent. But underneath, there's a cape and we have superpowers. But we also have super vulnerabilities called kryptonite. Our job as traders is to figure out what are our superpowers, what do we do really well, and what's the kryptonite that can destroy us. And so we want to look to our periods of successful trading, even if they're limited, to figure out what our strengths are, what are our superpowers. And we want to look at the kind of trading that just isn't working for us so that we can avoid the kryptonite, we can break up with it. So for instance, in my trading, I found that I consistently lost money. If I had directional opinions about the market based on research, it was fine research, and I would try to get into bigger picture trades based on those opinions and ideas. Consistently lost money. When I started trading minute by minute and seeing when price action was lining up with ideas that I had and used occasions where that very short-term action connected with the bigger picture, suddenly I became successful. So it didn't mean I couldn't trade, but I needed to play to my strengths. My strengths were in interpretation of moment to moment to moment information, which, by the way, is what I do as a psychologist. When I talk to people, they talk and they talk and they talk, I'm making sense out of what they say. And that's what I'm doing with markets. Our best trading comes from what we're good at. And usually that shows up in other parts of our lives. So I would encourage the questioner to figure out, what have you been really good at outside of trading? What skills and talents have made you successful in those activities outside of trading? And how can you use those talents and skills in your successful trading?
Doctor, this is always a kind of a question for me, and it's a question I've talked to a lot of traders about. Do you feel like Maria is a little bit maybe afraid of change? And, I think everybody to some degree is afraid of change. Of course, negative change, nobody's interested in that. But even positive change is difficult for people to accept. Do you feel like maybe Maria's a little bit like that? I've been doing this 5 years. I haven't been able to change anything to create positive results. Maybe I'm stuck in a rut and I just need to change.
Yeah, some people are afraid to change, and some people just don't know how to change. They don't know, they don't have a vision of alternatives. And so after 5 years, my leaning would be to step back from risk taking and go back to being a noob. Go back to trying out different kinds of trading in different markets, see what resonates, see what works, play with it, have fun with it. Don't pressure yourself. See where your talents lie. And chances are those would be in areas where you have made money in the trading you've done so far. And you'll pick up on the superpowers. And that might also help you figure out what you need to avoid as far as that kryptonite.
Well, you just answered one of the questions, and that was Ellis's question. What is the biggest, if you had one piece of advice to pass on to a new trader, what would it be?
Give yourself plenty of time to go through your learning curve. Look at how much time it takes for an athlete to go pro. They spend how much time on the golf course, how much time in high school, college, and minor league before they go in Major League Baseball. It takes years of preparation. In acting, it takes years of preparation. You need to give yourself that learning curve to develop the expertise, to go through that deliberate practice process. The big problem is, again, people want to make money. They want to trade to make money. And so they're too eager to put their money at risk before they're emotionally prepared and before they're prepared in their trading. And that creates the stress and that creates the frustration.
Dr. Brett, you said deliberate practice. Is there another kind?
Well, yeah, we can just write a journal and we can call that practice. But deliberate practice means that you're reviewing performance, what you did well, what you could do better, and you're setting specific goals for the next trading session based on your observations, and then you're tracking how well you performed relative to those goals. So it's deliberate in the sense that you're always observing, always keeping score, always setting goals, and getting better, a little bit at a time. That's different than just going on the basketball court and taking a bunch of jump shots. That's not deliberate practice.
So anybody that believes that they can become a good trader just by staring at the charts for 10,000 hours is maybe a little disillusioned when they finally get to the end of that 10,000 hours, if they're not actually taking account and trying to improve on each and everything that they do.
Exactly. And again, a lot of the things that are important to what we trade are happening outside of those charts. Like the example I gave you about the data release that came out for growth, we needed to understand that and see that, and that's outside of the charts. But even within the charts, we need to practice, looking at different time frames and integrating those, making practice decisions, giving ourselves feedback, doing it again. The traders I worked with in Chicago used to finish their day by replaying the market day. So their platform had a replay function, and they would replay the whole day, and they would view what happened in the markets and what they did, and they would pause it, and they would correct themselves, and they would take notes, and just like watching game film when you're preparing as an athletic team. And that really helped their learning curve.
Yeah, well, we have actually one of our good friends, Rips, who was on earlier today. He suggests doing the same thing. He does that. He watches the game films and just watches what happened, watch what he did, and what he may have been able to do better, and something that he may have missed on the way to improve the performance. It's a great idea. Really interested to see how you answer this question, Brett. Jonathan is asking, well, after having a few losing days, I start to perform better. And when I'm on a win streak, my performance drops. How do I combat this? A little bit of boom bust trading going on here, perhaps, Doctor?
Maybe, but often it's because the markets themselves have changed. And so we get into a trending environment, and day one, day two, day three, we make money. And then all of a sudden we go into a rangy, choppy environment and we lose money. So you want to examine the market conditions during your winning times and during your losing times to see if the problem might be you're just not adapting quickly enough to the shifts in the market. Sometimes people get on a win streak and they get overconfident and they size too big. And then they get on a losing streak and they get afraid and they size way down. And so they're making money, losing money, making money, losing money. But when they're making money, then they can take their biggest losses because they've sized up. And when they're losing money, they're not ready for the good times because they've sized down. So you really, really want to examine why the P&L is going up and down. And my first hypothesis always is that something in the market has changed and you're not quick enough to adapt to it.
We see a lot of traders strip their gears when the market state changes. I was talking recently about the tech bubble and all the guys in the NASDAQ bid at the Mercantile Exchange were making money hand over fist because all they had to do was wait for it to pull back, buy it, and they made money. And when that bubble burst, they never thought, that they'd have to learn a different market state. And they kept trying to buy it and getting run over, kept trying to buy it and getting run over. It just seems to take time for the human body and mind and spirit to accept the change in the current state of the market and to be able to adapt to a different strategy. It seems to happen, I don't know anybody that can do it right away. Some people are probably better at adapting to a new market state change, but it always seems to strip a lot of gears. And I can see that, if you're doing really well and the market's rallying and the market state changes and you're not doing as well, it very well could just be the change in the market state.
And very often, Hogue, very often what will tip you off to those changes is that the market will change in its volume, the market will change in its volatility, the markets will change in their patterns of correlation. So that, for instance, the market's been going up, 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 but now we get some upward movement, but some of the sectors of the stock market are going up and some are going down. It's a very mixed market. That's a change in volume. We had been trading 100 million more in the SPY ETF. We now all of a sudden we're trading 40 million. Well, what's that all about? Volatility, the range. People I work with look at relative volume. How much are we trading at each time segment per day? What's the average volume during the first 10 minutes of the trading session? Well, how does today's first 10 minutes compare to the usual volume in that first 10 minutes? We can learn a lot about changes by examining volume, volatility, correlation, and catch quickly this is different, and pull back.
Yeah, I call those like all nuances. When the nuances changes, be ready. Be ready for some sort of change. I have a really interesting question for you, Brett. Morella is asking, what music could I listen to reinforce discipline and concentration? I usually choose Led Zeppelin myself, but what's your suggestion?
That's really interesting because I've written about that topic. When I first started doing my work on meditation and building concentration, I listened to the instrumental music of Philip Glass, Glass. And he's a modern classical composer, but his music has almost a hypnotic quality. And there are many different instruments playing different little melodies with minor changes in those melodies. And you can really focus on the music and hear what each instrument is doing and how it's changing. It's a little bit like the markets. And so I found that very easy to focus on. It had a hypnotic quality, and that's the music I used. Anything that's boring or anything that's too exciting probably won't keep you in a zone. It's
Keep you
something you can
distracted.
focus on. Yeah, yeah. So music you can really focus on. Um, and it may not be music. Some people are auditory in how they process information. Some people are more visual and they can focus on a beautiful scene and just absorb themselves with that.
Excellent question, Doctor. A lot of traders that we've seen at TopStep over the last 13, 14 years, we've seen a lot of traders that had a degree of success while trading in the trading pits. Many of them have left and gone on to do different things, but we do see them coming back in and kind of dipping their toe into electronic trading. I'm a person that went straight from the pit. I took a year learning electronic trading, and I learned a lot from the traders that left before me. They were big traders. They were trading a big size on screen, and they lost a lot of money. So I knew that there was going to be some sort of a re-education that was going to be needed. Would you have any advice for some older traders, maybe, and even new traders on what to do to try and adjust or relearn the things that we used in the trading pit that are no longer there, and what to look for or how to keep their mindset when trying to get into electronic trading, because they are two different worlds.
They're very, very different worlds. You are absolutely right, Hogue. Yeah, it's a little bit like you can run a sprint, you can run a marathon. You can uh, climb a local mountain, you can climb a Mount Everest. They're different things. They look similar, but they're really totally different. Um, in the pit, you have certain visual cues. You are there. You can see what people are doing. You can see the activity level. You can hear the activity level, actually. Um, so you have certain cues that tell you what people are up to. And so you don't need the actual volume statistics to know that people are getting active and people are doing stuff. Now, you don't have that immediacy of feedback. You're not around people when you're trading on the screen. And so you need some substitute for those cues. And that's what makes it a different game. Those substitute cues do exist, but in a very different form. And it means going through a whole new learning curve. So I think I've mentioned in the past that one statistic I follow in my own trading is the NYSE tick, Tick. And it shows multiple times per minute. I think it's every 3 seconds. How many stocks are trading on upticks and how many stocks are trading on downticks. And so you can see moment to moment to moment to moment when there is more buying, when there's more selling. And you can see the breadth of the buying or selling. And you see it in real time. And there are certain setups that occur when we get stocks selling, selling, selling. They're trading on downticks, but the overall market can't go down. That's telling you something.
Mm-hmm.
That's a
Mm-hmm.
cue that I use in my trading, just like a cue that you might use on the trading floor in the pits, when you see activity or lack of activity. So there are things we can look for in the screens that give us those cues, but it's a new learning process. We have to go through a new mentoring. We have to go through new practice and develop a new variation on the sport.
Awesome. Great answer. Thank you very much, Doctor. And we have quickly come to the end of the session. Doctor, I'm going to say for each and every trader that has been watching this, thank you tremendously for your time, for your knowledge, and for you being here to answer our questions. We truly appreciate that. And, Doctor, if you have one last bit of advice that you would like to impart on everybody before we go, we would all love to hear it.
Well, thank you. And thank you for having me, Hogan. Thank you for setting this up. Last piece of advice, we get back to the superpowers. Figure out what you do well. Study your successes. What are you doing well? How are you doing it well? What is that telling you about you and your talents and your skills? Because we want to do more and more and more of what's working.
Doctor, thank you again. Blessings to you. Great trading to you. And will you come back and see us again one of these days soon?
I look forward to it.
All right, Doctor. Thank you very much. Folks, we've got the shoulder tap coming up with Jack and Ben. Doctor, again, we really appreciate you being here. I've read most of your books at least once, and I'm going to go back and read them again because it takes a lot to get through this thick skull. And again, we really appreciate you being here. Blessings to you, and we will see you soon.